You have been lied to when it comes to student loan forgiveness. The media is painting a picture that just isn't accurate if you look at actually how the programs work and what the statistics and the numbers really say. In this video, we're going to show you how to get and achieve public service loan forgiveness, income-driven repayment loan forgiveness, teacher loan forgiveness, and Perkins loan forgiveness and cancellation. The media has said that there's a 99% rejection rate for popular loan forgiveness programs such as public service loan forgiveness. But then if you look at the Congressional Budget Office, which is the official body in charge of forecasting for Congress, they have said that in the 2020s there will be over $200 billion forgiven by student loan repayment programs and forgiveness programs. That is a ton of money. And furthermore, over 80% of this benefit is expected to go to graduate and professional students whose loan forgiveness amounts tend to be very large because of the degrees that they pursue that cost a whole lot of money. So let's see why what a lot of personal finance personalities tell you is just not accurate about how you cannot trust loan forgiveness programs. Let's get started. First, let's look at the Public Service Loan Forgiveness Program. This program has been attacked relentlessly for its 99% rejection rate. Let's see how you can apply. So first, you have to work full-time for 10 years for a not-for-profit or government employer. This is really quite an important thing because a lot of people just don't when they apply. Now, you also have to have direct student loans, which is another big hang-up for a lot of people. Finally, you have to be on an income-driven repayment program during 10 years of qualifying employment. That employment does not necessarily need to be consecutive. You can have a cumulative 10 years. In other words, you can leave qualifying employment and come back to it at a later date. So you need to fill this application out. You need to sign and date everything, have your employer sign and date this, and then you submit it to the federal government. Now, let's take a look at the actual PSLF program data according to the Department of Education. You can see that there have been about 2.7 million of these employer certification forms submitted. That's a lot. And furthermore, a large number of them have come from either the government or nonprofit 501c3 sector. Actually, in fact, almost all of them have for approved forms. There's technically a loophole where you can be a part of a public service organization, which is not a 501c3, but you'll notice that almost nobody is actually qualified using that pathway, which means that you need to be employed full-time as an employee of a government or 501c3 organization. Why are people's employment certification forms getting denied? It's pretty clear that missing information, in other words, not having the right signatures and things like that, is the primary culprit here. No eligible loans is another reason. This is when you have loans from before 2010. Most of the people getting denied right now are because they had loans from before 2010 that are not federal direct loans. Finally, a much less common reason they get denied is the employer they're working for is not eligible. According to the government, over $100 million is set to be forgiven with public service loan forgiveness. It's already been approved. It's already in processing. And we have over 1.2 million individual borrowers with an approved employer certification form. You can see that the number of applications that have been submitted are a lot less, which makes sense because these are people who think that they qualify for public service loan forgiveness right now. You'll notice that only 2,000 applications have been approved, even though over 150,000 have been submitted. And the ones that have been approved have all been government or 501c3 organizations. Why have these applications not been approved? You'll notice qualifying payments is the number one reason for rejection at 58% of rejections. That means you had to be on an income-driven repayment plan, and prior to 2010, these just basically hardly even existed. So you had to have a PhD in loans to understand how to get a qualifying repayment plan before income-based repayment got invented around 2009 or 2010. You need 10 years of credit, which is why so many people that are applying now just don't qualify for that reason. Next, missing information. Obviously, that certification form has to be filled out correctly. If you miss even one signature or one date, they're not going to take it. So you really need to double check the form to make sure you filled it out correctly. The other reason people get rejected is they don't have any eligible loans. If you do not have direct federal loans, you will not qualify for public service loan forgiveness. And again, we have $100 million that has been discharged. So it is a myth that public service loan forgiveness is not starting to work. It's going to be exponential in the approval rate simply because public service loan forgiveness is a program that exists for direct federal loans, and direct federal loans were not the default method of issuance until about 2010. There's a temporary expanded loan forgiveness program that has been attempted to fix the PSLF program because of people getting bad information from their servicers about whether or not they qualified. Unfortunately, you still have to have direct federal loans, which is the primary reason people applying right now are not qualifying, because they did not have qualifying payments on eligible loans. Next, we're going to cover income-driven repayment forgiveness. To sign up for this, you actually do not have to work for a not-for-profit or government employer. All you have to do is sign up and continually pay on an income-driven repayment program. To sign up for this, you can simply go to Manage Loans and then apply for an income-driven repayment plan. And they're gonna give you information about the different options, and we can go to starting a demo here for signing up for an income-driven repayment plan. So we'll say that you want to enter a repayment plan, and we'll say that you're not in a not-for-profit or government organization, meaning that you're not eligible for PSLF, which is the most generous program. We'll say that you have one child, and we'll say that you are married. This is a question, if you placed on the ICR plan, do you want to pay jointly with your spouse? That's going to apply to almost no one. And then you're going to link to the IRS. So, did you file jointly with your spouse? Basically, if the answer is yes, you're going to have to include your spouse's taxable income. If you did not file jointly with your spouse, then you can say that, and under the pay-as-you-earn or income-based repayment programs, they will not include your spouse's income information in your monthly payment. That's most relevant for people who have spouses with no student loan debt. You do not want to say that you're separated unless you actually are, and you want to say that yes, you can have your spouse sign this application, because if you filed taxes separately and you're on the right repayment program, they're not allowed to count that on your repayment. And then, did you file a federal income tax return for the most recently completed tax years? And has your income significantly decreased? So most people are going to say no to that question. So then you'll click continue, and then you will get an estimate from the IRS, and then they'll pull that in. And so, for example, if you have $100,000 of loans and your spouse has $0, and your adjusted gross income is $50,000, and your spouse's adjusted gross income, let's say, is $0, and then we'll say just a random repayment program. So they're going to give you an estimate for your monthly payment. And there's a lot to this. This is why we have a business at Student Loan Planner, is we help people figure out what's the most rational, lowest cost way to pay this back. But basically, if you work for a private employer or you just work part-time or you don't work at all, then you can sign up for the best income-driven repayment program, and over 20 to 25 years, your balance will eventually be forgiven. The catch is, unlike the PSLF program, you will have to pay income taxes on the forgiven balance. So you'll have to pay that. And it's really not nearly as bad as you think it is, because basically your student loans just become a tax, and you just pay anywhere from 10 to 20% of your income, including the savings that you have to put away to cover future taxes on income-driven repayment forgiveness. To show you that you're not alone for people going for income-driven repayment forgiveness, notice this direct loan portfolio by repayment plan. You'll notice that the income-based repayment program has over almost 3 million borrowers using it, with $172 billion of student loans as of December 2019. If you look at the pay-as-you-earn program and the revised pay-as-you-earn program, you'll notice the revised pay-as-you-earn almost has 3 million borrowers with $176 billion of student loan debt, and the pay-as-you-earn program has about 1.5 million with $100 billion of student loan debt. So this tells you that there are a lot of people pursuing income-driven repayment, and a lot of people that are going to be pursuing forgiveness using this plan. So you are not alone. There are a lot of people depending on this. You should not think that you're the only one that's going through this. Next, let's talk about the teacher loan forgiveness program. So if we go to teacher loan forgiveness application, this is one of my least favorite student loan forgiveness programs. The reason being is you can only qualify for up to $17,500 maximum. And to get that amount, you have to be a highly qualified full-time special ed teacher, or you have to be a highly qualified math or science teacher for secondary school students. That gets you up to $17,500 if you pursue this program for 5 years. Now, if you're just a general secondary education or elementary education teacher, you can get up to $5,000 over 5 years. The reason why I don't like this teacher loan forgiveness program is because it does not double count along with public service loan forgiveness. When teachers have a lot more debt than $20,000, which is very common for any teacher with a master's degree, then you cannot pursue both of these programs simultaneously. which means that public service loan forgiveness might have allowed you to pay only a couple $100 a month and then have the balance forgiven after 10 years of service tax-free. Whereas teacher loan forgiveness only allows you to have this minimum amount forgiven, and that means a lot of teachers will pursue this program because it's named for teachers, only to find out that they've wasted 5 years of their career not getting loan forgiveness or credit towards the more generous 10-year version of public service loan forgiveness. If you look at what a highly qualified teacher is, if I'm going to scroll down, it has the instructions for this here. Okay, a highly qualified teacher, it defines it basically as having a full state certification. In some cases, you need to have a bachelor's degree. Sometimes you have to pass a specific rigorous test. So there's all these specific things that you have to do, whereas public service loan forgiveness, it's there. All you have to do is be a full-time employee of a non-for-profit or government organization. So it's a lot more generous, in my opinion, than the teacher loan forgiveness program. But just to show you that the teacher loan forgiveness program is actually happening, take a look at the teacher loan forgiveness program in terms of dollars discharged. So you'll notice that we're talking in millions of dollars. There have been hundreds of millions a year discharged from the FFEL loan program, which has gone out of existence gradually. And then we'll notice that the direct loan program, this balance of forgiven loan debt is actually exploding in terms of discharged debt. So you'll notice that thousands of borrowers, it looks like 28,000 teachers in 2019 fiscal year had their student loans forgiven under the teacher loan forgiveness program, and a total of about 270 million got forgiven. So that's a decent amount. It's not a massive amount, and that's just because the teacher loan forgiveness program is, in my opinion, poorly designed. That said, it is not true that it doesn't work because the data shows that it does. I just think that you would be much better off going under the public service loan forgiveness program if you're a teacher that owes more than $20,000. Finally, let's talk about the Perkins student loan forgiveness program. So Perkins loans have been discontinued. They really don't exist anymore for new issuance, but a lot of people still have them, so it's relevant to know whether or not you could get it. Perkins loans are canceled over a period of time. So you can be a teacher in some situations. You can also be other occupations as well. So I'm just scroll down here just to give you some examples. Firefighters, law enforcement, librarian, military service, public defender. Basically what happens is when you're doing Perkins loan cancellation, 15% gets canceled in the first and second year of service, and then 20% for the third and fourth year, and then the last 30% gets canceled in the final year. Perkins loans are usually only a few $1,000s. So honestly, a lot of times you're talking about very small balances, and again, Perkins loan cancellation does not apply to a lot of people that are in public service professions. So remember that Perkins loans do not qualify for public service loan forgiveness unless they're consolidated. So if you actually can consolidate Perkins loans to make them eligible for forgiveness under public service loan forgiveness. So if you do not qualify under any one of these professions, then consider consolidating your Perkins loans so that you could receive public service loan forgiveness instead. If you like this video and want additional tips, subscribe to learn more about student loan forgiveness. Also, if you really have a lot of debt, go to studentloanplanner.com. Our site has a ton of resources to help you get out of debt faster and help you save money. Finally, if you have any questions about student loans, just sound off in the comments. Let us know because we'd love to help.